the Fed will start printing at this stage or even in the next, let's say, 6 months, because they can't do it with inflation numbers as high as they are. But
Yeah.
once inflation numbers do come down to an elevated level, but not extreme level, again, 4%, which is kind of where I see them coming back to, and then you do get the economy to swing into a recession that's bad enough, I absolutely agree that the Fed will start printing again. It's their only playbook that they have left
Yeah.
to do to stimulate, and the markets expect it. Investors, I mean, what's amazing about the price action recently, just yesterday, or I should say Friday and today, we saw the meme stocks running again like crazy,
yeah.
like it was 2021, which tells you that small retail money is thinking that just like in the COVID crisis, the Fed is going to come out, print, and get us all back to all-time highs in a matter of months. I think that's a fake out. I think the Fed, again, there's no way the Fed can print with the pressure it's putting on. And just think about politically, like you have a midterm election, the Fed can't start printing before that. I mean, that would be catastrophic for the Democrats. So greed and fear really rule the markets. And right now, people are fearful if the economy tanks more, if it's risk off, people will sell regardless. And probably institutions will still be very hesitant to buy into Bitcoin until we have a firm framework of kind of regulation out there from the government. But I do think, again, like I love seeing this stuff since I'm a long-term Bitcoin bull, because it's just kind of one more piece of the puzzle that's going into kind of the frame that will be a positive long-term for crypto. It's the adoption, right? I mean, for me as a Bitcoin long-term bull, my biggest fear is that it becomes obsolete, that institutions never get involved, that you don't have that money, that people put pension funds in it and all these things. And BlackRock getting involved with Coinbase, to me, kind of is just a great thing in the long term. Doesn't affect short-term price. Long term, it's really good.
NASDAQ goes up 10%, Bitcoin goes up hundreds of percent. And on the way down, it's probably going to be the same thing, right? Or back on the way up. So instead of just trying to see how much if Bitcoin goes up, and then after that, there's another part of technical analysis that will be divergence. So Bitcoin, you could flip the script. So Bitcoin might go up a certain percentage up when the NASDAQ refuse to go that much higher. Then after that, you could start creating some divergence between using those two instruments to show underlying weakness in the whole like tech sector. Definitely, we should wait until the gold to silver ratio breaks down. So gold silver ratio is a financialized instrument where if there's risk on of a market meltdown, of a spike, the gold silver ratio will crescendo up with the DXY, with the VIX. And right now I have a level and could show the chart that until the gold silver ratio unwinds, that means the market is not sure about the risk. So definitely I have a level for the gold silver ratio. Until it breaks down below that level, just observe what's happening. Once it breaks down below that level, it's game on. Silver and gold will outperform US equities from that moment on, and silver will outperform gold in the initial legs of the recovery phase of the US equities. I'm going to show on the chart, there's a descending trend line. When gold breaks above that wake up line or that early breakout line versus SPX and the levels that Kevin mentioned, gold is about, it can break out above its 1800, 1900 or 2000 levels. That's a game changer because now it's win-win. You have gold breaking out on its own chart, but not just that, because like you said, gold could be breaking out on its chart. But if SPX is kicking gold's butt and it's going higher and faster, why go long gold? So you want gold to break out on its chart, and you want it also at the same time to break out versus the SPX. And every time that's happened, it's a 10-year bull market for precious metals, silvers, miners, all that. The capital flows are leaving growth stocks for whatever reason, and they're going into commodities.
Ethereum's already over 100% off of its lows. And I think, again, Ethereum has that higher beta where in market bounces, it's going to do more, but then in market bear markets, it's going to lose a lot more as well. And because I still think we have that leg down, I think if you had to choose one, you want Bitcoin because, again, it has the stability, it has relative stability to Ethereum. Now, longer term, that's the better question, right? I think that, again, you'd probably want some exposure in both. So you cover both bases. You have the use case of Ethereum and the Ethereum network, and then kind of the digital gold where a lot of institutional money will flow into the Bitcoin Bitcoin investments. So I think in longer term, I like both of them. I do think that the retail crowd can start to at least look for certain signs that make them feel uncomfortable. And just like you dollar cost average in, there's nothing wrong with dollar cost averaging out in a way where you take a little bit off the table. And what I would say to the retail crowd is, look for signs of mass hysteria. And when you see that, when you see everyone, when you go into the bagel store, or the pizza place, and you got the guy behind the counter telling you he just got into Dogecoin or he just got in, those are signals that as a trader, you can't get excited by, you actually need to get fearful by. And so again, I'm not saying you necessarily want to say, oh, I'm going to dump my whole position, but what's wrong with taking 25% off when you see those signs and then potentially rebuying at a lower level? So I think dollar cost averaging in is great. And I also think taking a little bit off the table, like I say to all the traders that I trade with, no one went broke taking a profit, right? So I would say that this is a time to take a little bit off the table, right? So what you can see is, again, you got down, even though down here it was as low as about just below 900. So you have to look at it. And one of the things as a trader, I make sure to mark myself, it's not what your entry is, it's what the low was. So, your entry might have been 1400, but if it went to 900 or 885, it's now up 100% off of those lows. And you have to say that's a big run in a very short amount of time. Now, having said that, I love the fact that the chart is banging on this resistance. You can see the resistance very easily over here. I love that we hit it here. We consolidated, we hit it here again. And then it looks like we're trying to break out. So taking a little off is a good idea. To me, it still looks like there's a little bit more upside in Ethereum, likely coinciding if we can get to 25.5 or greater on Bitcoin.